Good afternoon, everyone. Thank you for joining us for this session on FX hedging and automation. This is a critical topic in the evolving landscape, especially as companies look to better manage their currency risk using innovative technologies. I am delighted to introduce our panelists today. We have Mr. Seimenis from Eurobank, who will provide the insights from the banking perspective, and Mr. Kerim Sunguroglu, who specializes in web trading technologies. Welcome to both of you. In this session, we will explore the latest trends in FX hedging, the role of automation, and the future of currency risk management. To set the stage, let's start with a brief overview from both of you on the current state of FX hedging and automation. Ioannis, would you like to briefly discuss the importance of FX trading for corporate clients?
Yeah, thank you, Eva. I would like to thank you personally and your colleagues in HUT for the invitation. In Eurobank, a large and consistent part of our hedging business stems from FX hedging and is attributing to large corporate SPVs down to small business. FX hedging is a tool to eliminate or mitigate the foreign currency impact on corporate balance sheet. And I think it facilitates a lot corporate treasurer mandates by securing, let's say, at a certain or near certain degree, the translation of foreign currency impact or foreign currencies volumes in local reporting currency. It also makes the job of CEO and CFO a lot easier during earnings call, reflects a prudent management team and robust procedures and policies, and above all, protect corporate margins, especially for those corporates that could not pass the impact to their suppliers or clients. With the extroversion of the Greek companies, the enlargement of the average corporate balance sheet, and with the outburst of the recent geopolitical risk, I think that FX hedging comes at the forefront. FX hedging does not mean that the corporate treasury should always be engaged in buying or selling forward contracts. The proper recording, let's say, of all foreign currency flows may provide an insight, and the treasury might find out that several risks annul each other. This is the so-called natural hedging. Of course, by raising foreign currency debt, in some cases, let's say, may have the same efficiency for those corporates that faces liquidity mismatch for a short term. Another issue that matters for corporate treasurers is the pre-hedging. The hedging of forthcoming, I could say, asset or liability before it is officially registered into the corporate balance sheet, especially in an environment of very favorable interest currency rates, or for a corporate that has a large commercial power or near unique product. Of course, in this context, you could not forget to have a look what your peers are doing. And based on our experience in the past, we have seen corporates to feel the impact of foreign currency moves, let's say, even without having even a contractual liability or asset in a foreign currency. I think FX hedging should not be considered as a cost. I think it's one of the most fundamental bricks for the corporate to achieve its objective. I think that's my reply. Yeah.
Thank you, Ioannis. Let's shift our focus on automation now. So, Kerim, could you elaborate on how technology is transforming FX trading?
Sure, Eva. Also, thank you and Hat for this invite and this opportunity. It's great to be here. Now, when it comes to FX hedging and automation and using technology, well, in general, firstly, it increases efficiency and decreases risks and allows you to do better risk management in the execution side of FX and managing your risks. Now, we as 360T, we are a multi-bank FX marketplace, and we are a daughter company of Deutsche Börse Group. And what we see for the automation and digitalization part is that there is a strong demand from the clients towards digital channels. We repeatedly have done many client surveys, and in the corporate space, for the last 10 years, the number one topic in Treasury teams is actually automation, according to our surveys. Now, with digitalization, digital channels, firstly, with the available technology that has been present for 20 years, clients can traditionally, instead of using phone and emails to execute their trades and reach out to banks one by one, they are able to, using the digital platforms, send out an RFS to the banks and receive quotes from the banks within milliseconds. Name it for a spot, forward, or a swap. And then execute with the best quote with a single click. Now, latest systems, latest advancements has taken this process even one step further. And it now allows fully automated FX trading coming from the treasury management system, upload of exposure to an execution management system, fully automated execution, and then export of the tickets, which even makes it more automated and decreases risks and increases the efficiency further within this workflow. Now, that does not only increase speed, as I said, it also decreases error margins down to a very good level for our clients. And on top of that, also digital execution management systems help now with data management side of things as well, where you can have audit logs of how an execution is done, and you have full control over the workflows. So you can write down the workflows and increase actually the transparency and rule-based systems of the treasury teams. And finally, of course, to do the analysis of the executed trades as well, having these data of execution and competitive quotes that you collect for execution can help you a lot with going back and reflecting where you are standing in the FX market and how is your trend actually in general.
It's impressive how automation is streamlining processes and enhancing and enhancing accuracy in FX hedging. This naturally brings us to the practical applications. So, Ioannis, what solutions do you currently offer for managing risk for corporate clients, and through which channels are these services available?
Okay. First of all, I have to admit that the gap of knowledge and understanding between corporates and hedging experts has started to vanish because the corporate teams are now much more well-informed, well-equipped with tools, and they have access to really tight pricing. In Eurobank, we offer a rather broad portfolio of instruments, although the majority of the volumes we execute in FX hedging comes from rather plain instruments like forward, outright forward, and flexible forward. Of course, we offer a full pool, let's say, of optionality through vanilla options, barrier options, leverage and average forwards, target accrual range forwards, And in general, we're ready to discuss and price and offer eventually any other structure that a client might present on its own. In most of the cases, corporates are going short volatility. That means that they select structure that is short volatility in order to be compensated and enhance the strike price of their hedging, if we could call this. To the availability of corporate, the FX swap for those corporate that has a temporary mismatch, let's say, and they would like to exchange one currency for another for a shorter tenor at predetermined prices, has the same efficiencies, let's say. And for a longer period, we use cross-currency interest rate swap, which also alter the risk exposure of a certain asset or liability. Although it's not considered as a hedging, market-wise at least, several corporates are going short of vanilla options, or they trade and invest in dual currency deposits in order to have a yield pickup or to collect the premium. All the above, let's say, strategies I mentioned before are offered in combination, and some of them we trade it on a multi-settlement dates format. We call it strip. As far as the channels, I think that the dominant role has still the oral confirmation through telephone. We use emails, Bloomberg infrastructures, and since 2017, we offer our corporate clients the ability to trade initially FX spot through our banking. And for the last 3 years, we have expanded this offering to outright forward and flexible forwards. Since just before the summer break, we launched APIs through open banking architecture to clients, to corporate clients, so they could connect their systems directly to the bank systems in order to trade FX spot for the moment. But our next step is to enrich our portfolio with the forwards and flexible forward as well. And this is for 24 hours per working day service.
Okay, thank you for that thorough overview. It's evident that having a diverse set of tools is essential in managing FX risk. Speaking of tools, what's your client's experience with the automated channel so far, and what are the advantages and disadvantages for corporate clients?
First of all, I think that the usage of our digital channels grows with double digit since 2017, when we first introduced the first one. This might be due to the large pool of the clients commercial bank has, and I think that it will stabilize in the coming years. Just to give you an example, for those 20% of clients active in FX hedging, doing it through our e-banking, through our digital system. And for the last 12 months have had executed circa 1,000 transactions. According to our experience, and we executed a survey, let's say, very recently, the acceptance of the digital channel is very enthusiastic. We consider it as a plug-and-play instrument, let's say, but in a few cases, we experience some delays due to corporate issues. But other than that, I think that everything works perfect. As far as the advantages of the digital channels, first of all is the smooth execution of the transaction, the elimination of the paperwork, the availability 24 hours a day, the cultivation, let's say, the digital cultivation of the corporates, and the better monitoring of the position or the close monitoring of the bank credits or the corporate internal lines. Sorry. As far as among the disadvantages, I see mainly is the internal corporate approval framework in some cases, the introduction of digital tools to a slower changing culture of company, the existence of many platforms in the future for a corporate that has many banking relationship in place, the lack of personal contact, and sometimes the perception of a lack of negotiation at the spot.
It's great to hear that these automated channels are well received, even with some challenges.
Yes.
This brings us to think about the future, and given the rapid advancements in technology, what changes do you foresee in FX hedging, especially with the evolution and the automation of the processes, and how is your bank preparing for these challenges?
First of all, we have taken the strategic, let's say, decision as a bank, as a unit, as a treasury, to bring the corporates and to support them to their transition, let's say, to the digital world. We review on a regular basis, and either we develop internally or we cooperate with third-party providers in order to follow the trends and meet the client needs. All we know that the new generation is massively inclined to applied technology, let's say, and we all should build on this. As far as the systems, I think that in the near future, the corporates would have access to systems that would provide much more complex instruments anytime. They may provide the opportunity to build your own exotic strategy and execute instantly at very competitive pricing. We try, let's say, from our part, to enrich our offering, and we have formed a task force, let's say, which prioritize the project and secure internal resources that are always scarce. And I think that at the end it will be successful. If we consider the number of our clients dealing in spot or in e-spot, in digital spot, and the number of clients that deals with a traditional way for FX hedging, I think that the future of the digital FX hedging is bright and very promising for the future.
Mm-hmm. Adopting technology and planning for the future is essential in this changing environment.
Yeah.
Kerim, you've been at the forefront of integrating technology. Which products are corporate clients currently use to hedge their FX risk, and how is technology integrated into these solutions?
So, yeah, thank you. Again, and speaking next to an experienced banker like Ioannis has the advantage of that he shares a lot of valuable information and foundation, and I can add our side of the topic from our side. So we have mainly around more than 100 billion euros of trades per day, around 200 actually, and well, I'm responsible for the execution management system of the EMEA region. And the EMEA figures from our EMEA side, we have mainly FX swaps spots, forwards, options, and then also blocks, which are combining spots and forwards together. NDS products in FX area as main products, so to say. And among these, almost around half of 50%, around 50%, a little less, but of the trades volume is in FX swaps. Then comes the spots and forwards, which also take up something around the other 50% as well, and the rest is distributed among the other products that I have shared. Now, also, now as I have shared at the beginning, the RFS technology, which allows clients to send the requests for these products to banks and collect quotes manually and execute, was the previous technology in the last 20 years. And now, for these products, the new automated technologies have emerged. Within these technologies, the possibility of execution is from direct upload through APIs from Treasury management systems to the platform. Then in the platform, it is possible to, per rule basis, automate the trades, the execution, and send it out to the banks. And the systems can now, through very strong algorithms, collect the quotes from the banks, just like a treasurer is doing, and also observing the market, using market data to analyze quotes and comparing them to the market and executing within the expected range. So you can filter out the quotes that are outside of the defined tolerance range. In addition to that, of course, a lot of approval and compliance rules can be digitally applied to these workflows using these channels as well. For example, 4-eyes principle is the most common one. But on top of that, for example, you can use compliance rules to ensure best price execution as well, for example. And you can add also logs of each execution to each trade for internal and external audit purposes. So this also, with the transparency, gives a very good overview of the FX execution policy to the audit side and also to the executive management as well. So how Treasury is functioning can be transparently and professionally put out. Also, the products extend to the bank side of the corporates, for the corporates as well. So for these products that I have shared, it is possible to provide the tools to banks as well, so they can automatically price from the pricing engines these requests. So the automated request goes to the banks use the tools as well to automatically price these requests. So end to end, from the buy side to the sell side, this process can now be executed automatically through digital channels.
Mm-hmm. Given the crucial role technology plays in improving efficiency, I, as a treasurer, I'm curious about how can the FX hedging processes be automated, and what role does data play in increasing the success of these strategies?
So, main automation's goal is basically to increase efficiency, decrease errors, and also decrease risks in general as well. We have so far worked on many projects with corporates, with other client segments like asset managers, market taker banks on the buy side. And for example, for automation projects, I can share how this has functioned for several clients that I also had the chance to work with. For example, chemical company, very famous, BASF, or the airlines, Lufthansa, the tires and auto parts company, Continental, and the company who have saved, for example, all the world's lives during the pandemic, BioNTech, for example, used the automation technologies to improve their FX hedging. Mm-hmm. So, because at the end of the day, the goal of every Treasury team with automation is like with the limited workforce, limited human resource that we can get for the treasuries, get the best results, apparently. Now, not only these large corporates, but also medium-sized or even smaller corporates have used the automation to actually not only just automate and auto-execute all their trades, but also, for example, use approval processes in a way that they can, for example, for tickets that are larger, get the treasury manager's approval within the system and get it recorded in the logs, because it is always a risk topic, who can execute how much, and how is the authorization process working. Like you said, like Ioannis has mentioned, for example, a risk for the treasury. But these, for example, using the digital systems can all be set with rules. So let's say 100,000 euros limits, above 100,000 tickets should be approved by a senior treasurer. And below that part, any treasury employee can execute with their own initiative, for example. Now, automation from this perspective and the execution management systems can be seen as a team member that's sitting side by side with the treasury team, never getting sick, never taking any leaves, and working all the time as a part of the team. So it's, I think, the best view is to see that as a very active team member. And also, a general perspective on automation is that it's not just one leap process, one-step process. It is actually a journey, the automation. So what we have seen with the clients is they do that as a step-by-step process. They maybe start with just using some digital platform, then start with some integrations, and then step-by-step they add the rules, but go to the level of automation they want through time, actually, with just not a single project, but step by step. And I think that's the best approach, because also the team needs to get used to using the new products and processes, and it should be well known, and you should trust more in what you are using than go one step further in general. So that's, I think, in general, the role part of FX automation. And the data part, especially, as I have mentioned, for the audit part, it is very important to have the logs. And also for analysis of the execution, using market data is also very valuable. So after the execution, using FX data, FX market data to compare your execution against and see where you are standing and follow the trends is a very important use of the data that can help the treasuries a lot.
Thank you both. You have shared insightful perspectives on the intersection of technology and FX hedging. Before we open the floor for questions, please join Slido Hat 2024 for your questions. I'd like to give each of you a chance to reflect on each other's points. So, Ioannis, how do you see the role of technology evolving in your FX strategies? And Kerim, how do you see technology directly benefiting corporate clients in their FX hedging processes? And what challenges do you face in helping companies implement these digital solutions?
I think that technology could replace humans in several steps across the hedging process. Especially could provide easiness of execution. In the future, maybe provide soft advisory, automated management of the orders, best execution. This journey, as Kerim said, requires digital-savvy persons from both ends of the cable, from the banks and from the corporate as well. So the corporate could prepare, let's say, and welcome the new landscape. because it would facilitate their FX hedging mandate. With the advent of Gen AI, poses a lot of dynamic challenges, I could say, due to the continuous market conditions changing. I think that they could follow market trends, recognize patterns that for a human's eye it's very difficult to spot, provide sentiments, non-linear relationship, and many others. That the information runs at very high speed, and when we react, sometimes it's too late. The new technology could also provide insight in proxy hedging, in conditional hedging, and may give the corporate more comfort when they negotiate for business in new areas. They could bid longer terms contract with more confidence. And in some cases, I think that they could provide their own new ways of payments. We have to wait to see how user-friendly all these systems would be, at what cost for corporates, if they promote market stability or not, because all this, I think, they will be the ultimate catalyst for the corporate society, let's say, to accept them in mass.
Kerim?
Yeah, and also from the technology side, what the benefits we see the most is, of course, having a better control of the FX workflow. And then having an FX execution policy for the Treasury, for transparency, is very good for the Treasury teams. Also for staff turnover, for new employees, having a policy and a flow in place that's backed up by technology is very helpful for everyone around from a 360-degree perspective. In addition to that, it also allows the Treasury team to have a broader view of the market and how the technology in the market is advancing as well. So that's, I think, also very helpful for the treasurers, the Treasury team, to just improve their view on the market, how it's evolving, and also boost their own personal CVs as well to add this experience, so I can say. Now, the challenge I see is actually aligning the perspectives between the Treasury team and the executive management can become a challenge to see actually the advantage of automation and to show them to executive management can be sometimes tough for the Treasury teams. And for that, of course, very good communication is the solution. We also support our clients always. We also work with them side by side to show on the user level to the whole Treasury team how automation and digital solutions help them, and also at the company-wide perspective, for the executive management's perspective, of also how it can be beneficial. Now, also, we see that in Greece, we see very good demand in that side for digital channels, for 360 products and execution management systems, automation as well, I can tell. It might be a little slightly delayed compared to some other European countries, but we have already existing clients that we have been working very well together. And from that side, I also see for treasurers that it's a very good time to become an industry leader, because we already have some clients who are very reputable and working very well in that area. But I always think it's a good opportunity to work on an automation project and be one of the industry leaders that utilizes these technologies best within the space.
Thank you, Kerim. And thank you both for your valuable insights. I think if you could answer very shortly the first question, because we have run out of time, how can a corporate be benefited by interconnectivity of an FX and technology platform and the bank? But please be very
Yes, I
short.
think that this question is related to what we have done already in Eurobank. I think that the biggest benefit, let's say, is the smooth execution of the transaction, 24 hours per working day, and the elimination of any paperwork. I think we have around more than 20,000 transactions per year in spot execution. And I think that this is the future. It's the only way to the future. Within 10 seconds, as far as spot transaction, you see the appropriate registry entries, let's say, in your account. So I think that the same will happen with other services the bank offers through API. And we hope that in the near future we will enrich our offering with new products and maybe with new channels.
Mm-hmm. Thank you. And as we wrap up, I believe we all agree that staying ahead in finance means embracing innovation and managing risks effectively. So thank you once again. Thank you for joining us, and enjoy the rest of the summit.